Good morning everyone, and welcome to the PivotBoss pre-market video for Wednesday, August 11th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now the ES is sitting on highs just above the previous session high just a moment ago, as it has rallied on pre-market economic data. Right now, obviously, the market still remains within a very narrow 4-day range above the previous month's highs. This range also developing right around the existing 2 to 3 week range here. But you can see how much more narrow it's gotten even over the last 4 sessions. Day over day, just looking at the 1-day over average, the volatility has completely dropped, as you can see here. From the beginning or middle of July, volatility has dropped tremendously. The 10-period average has dropped, the 5-period average has dropped, everything very significantly low volatility trading days here so far, but still a very bullish overall uptrending market. And again, even if we were to pull back, it remains a buying opportunity. We may not even see a pullback of this magnitude, as this market needs likely some sort of catalyst in order to get it moving. But overall, everything remains higher. Fade the edges with an upward bias. If price can push through the previous session's high and hold through those 44.38s, we may see some upward expansion here, but not likely, as we continue to see further range-bound activity in here. We'll see how it plays out, but overall, in order to get this thing going higher, sometimes it needs to flush first and then push higher. The one thing we have seen is price has pushed away from the FOMC key level finally, which means we are moving higher away from that level. At times you'll move away from that level until you see rejection and come back to retest it before you bounce. Kind of like what we saw over here. You moved away from the level, you failed, you hit it here, and then you bounced. So at the moment we are moving higher away from that level until rejection occurs. Here's a look at the NQ. You'll see the NQ right now, failed new low developed here in pre-market trading. Price pushing below 2-day lows here, below that 15K level. A great little trap occurred there, and we are now higher off that level by 100 handles. Again, an uptrending market overall. The bullish PIMA trigger zone continues to hold. You can see right here, here's the FOMC key level as well, coming just shy of that level before bouncing. A little bit of a flag pattern here. Can the NQ start to push here through the previous week's or previous month's high price and start to push through to new highs? Overall, this market again remains very bullish. We have remained mostly within range over the last 3 weeks, but again, at some point we may begin to see some form of expansion, and it's likely to the upside. Again, if we were to see some sort of deep pullback, it could still be a great trap for a continuation higher. So right now, based on the mostly range-bound action, you still want to fade the edges with an upward bias. And again, if it can push through 15150s, it starts to open up the upside a bit more. If we take a look here at crude oil, here's a look at crude. Sitting up here near highs, this one here with a bit of a pullback to begin the day, but that deep pullback was an opportunity here for bulls to defend, and you're already seeing kind of a good little bounce off those lows. So you can see here a deep drop here, not quite into 65.01. I think it got to 65.15s or so, and returned. Here's the midpoint of that day, and so far 2 days running it's held. A strong day yesterday, today with a deep pullback. Basically 2-day highs, right, one and the same. So 2-day range is basically spot on from what it was yesterday. Again, if it can continue to hold that midpoint, very important for a continuation higher and a move back up toward this blue dot over the next few days. So we'll see if it can continue to hold the midpoint from Monday's session, which is 66.53. If so, we could have further upside price action. On the intraday chart, above 68 again begins to open up 68.80 and perhaps even higher. Taking a look lastly at gold futures, again after that major sell-off here, that flash crash that happened, we have seen a digestive day yesterday. It was mostly range bound. digestive type trading today. We're starting to see a little bit of a push beyond that high. Again, the idea is that we're likely stuck within the current range of 1760 to 1675. So if price pushes into that high, we may see it begin to trade back within this D-shaped profile and build out in here. It needs above 1765 in order to open up the next highest range, and that's something we talked about before. But this failure right here put it in the lower distribution. So we'll see. Again, whenever gold sees those huge days, those 40+ point days, it's usually to the downside, and it usually leads to more weakness. This is a strong punctuation down here, so for the most part we may stay within range. So short-term uptrending price action perhaps could be in play on a near-term basis, but unless price can get back above 1765, we're likely still inside this range. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.